All right, let's go. Amazing day. Amazing day. See if you can hear me.
Amazing day.
Yes, should be able to hear me.
Lights on direct.
Yeah, amazing day. Yeah. I don't want a good morning. I told you, I'm done with the good mornings. Yeah.
Well, you're done with the morning now. Done with the morning. What's going on?
What's scared? Wait a minute, I can't hear you. Why can't I hear?
You can't hear me.
One second. It's my phone.
Amazing day.
Amazing day. Let me try and sort out this sound car. Let's select a speaker. Cool. Can someone say something, please? Somebody say something to me.
Yo, check mic.
There you go. Got you. All right. Amazing day. I told you guys I'm done with good morning. Yeah, I need a good morning. I need a good afternoon. I need a good evening. Everything. So I need an amazing day. All right. Forget with a good morning. All right. So let's go. Let's get straight into it. All right. We are going to be understanding. Yes, nice to see a couple of family members. Ain't seen for a minute still. Walk on. Gal them saucepan we got in here. Yes. Walk on trade. Gal them saucepan.
Hey, great day.
Yeah, amazing day. What's going on, man? Like Dwiz? D-Wiz. All right. I'm waiting to see some more faces now. Let's get the numbers up.
Amazing day, my bro.
Amazing day, bro. I told you I'm done with good morning, bro. Like, I think that's the problem. Man's having a sick morning when afternoon looks it's all types of things going off. Yeah, I need an amazing day. All right. So, look, first and foremost, guys, we're going to zoom out and we're going to understand what the strategy is. For some of the new people, forgotten about strategies, forgotten how we trade, how I'm going to get amazing results. As you know, I'm going after 2 million under management. That's the aim, all right? It's done okay at the moment. And I'm just making sure I have a little plan anyway of how I'm trading them. All right, so guys, it's all about first and foremost understanding what the strategy is, okay? Now, for those of you who are a little bit off, can't recall, trying to just see where I'll go and get back into it, they know that they want to trade. What's going on here? The button being held down? Yeah, and they're not too sure about, where to get started. Understand the strategy that we trade is pure market structure and price action. Why? What's going on? It's like a button's being held down. Let's make sure there's no buttons being held down. Let's see. All right, so essentially what we trade is pure market structure and price action, okay? Market structure and price action, understanding our Russian doll theory, understanding where we get in, understanding how the market lets us know what it wants to do before it does it, okay? And how we can manage our risk so that we can prosper, okay? So we have a few people here that are doing their funded challenge. And let me explain to you one thing, and one thing you need to recall is that the aim of the game is survival. Yeah, do not blow your account in 2 days, in a week, whatever it may be. Yeah, manage your risk so that you have longevity in your journey. Yeah, I guarantee you the worst thing, the thing that's the most sour, is you blowing your account and then going back into your credit card or your debit card or wherever it may be to go and find more peace to go open up another account. Because you will open another account. You will be like, I made a silly mistake, let me go again. I'm telling you, it will happen. All right. And at that point in time, it stinks. It doesn't taste very nice when you have to go and do that. So please manage your risk accordingly. If you can only lose $10,000, yeah, make sure you're not taking $1,000 trade each time. Yeah, not in your learning phase. It's unnecessary. It means that you're going to blow your account in 10 bad trades. You can take 10 bad trades. You think, I'm not going to take 10 bad trades. You can. All right. So on that basis, you want to really de-risk. You want to be risking a couple percent off the 10,000 you can lose. Yeah. And then when you get up and you're positive, you're profitable in your account. So you're 102,000, then you can maybe scale up a little bit. All right. Because this is a game. Remember, this isn't real funds when you're trading your prop firm challenge. It's a game. The game is, how do I pass my prop firm challenge? That's the game. If you think it's some other game, then you're confused. It's how do I pass this game? Because this game has rules. Yeah, there's certain things you can and can't do. Yeah, there's certain things that they want you to do. You can't lose a certain amount of money a day. can't lose a certain amount of money in total. That's got nothing to do with your own funds. In your own funds, you can take your funds from 100 grand to £1,000 and then build it back up to £1 million. It's your funds. But you can't do that with this game, right? So let's have a look and understand what's going on in this GBPUSD market. This GBPUSD market is bearish, making lower lows and lower highs and lower lows and lower highs and lower lows. You can identify this in any market of what it's been doing on a much bigger picture. Look, this is going all the way back to 2008, and I've got a picture. So basically, this is telling me that since 2008, the Great British Pound has been losing strength against the US dollar. Now, unless something substantial happens in the world, I don't know if that's going to change. I've got to see something change, like the Great British Pound starts getting mad strong and US dollar starts getting mad weak. I can't see that happening right now. Yeah, I just can't. So therefore, this bigger Russian doll, let's understand what I mean by this, my Russian dolls. The people who don't know what a Russian doll is, and don't understand what the theory is and what the understanding of the strategy is when my computer decides to move, right? Russian doll, okay? Now, anybody who knows what a Russian doll is, it's like you get a big doll, and inside that bigger doll, there's a smaller doll. And inside that smaller doll, there's a smaller doll. And there's a smaller doll. And there's a smaller doll. And it gets smaller and smaller and smaller. For all you know, you could have 100 dolls. Yeah? Or you could have 10 of them when it looked like there was only one doll to start with. Now, this is our theory and my synopsis of the markets. The markets are like a Russian doll. This bigger doll is maybe your, for argument's sake, daily structure. And inside your daily structure, you have a 4-hour structure. And inside the 4 hour, there's 1 hour. Inside the 1 hour, there's 15. Inside the 15, there's 5. Inside the 5, there's 3. Inside the 3, there's 1. Inside the 1, there's some seconds happening. This is what happens. Now, the point is this. You can't be out here just trading the 15 structure, because when the 15 structure gets to the scene of the 1 hour structure, it's got to respect it. It's got to put respect on its name, because it's a little man compared to this structure. But vice versa, this 1 hour, when it steps to the 4 hour, this little doll over here, it needs to put respect on that structure, and so on and so forth. So when we go and we look at this market right here, have a look. We can understand who the Russian doll is, and what we're respecting this bigger Russian doll. This here and this here, for argument's sake, maybe even this one. Okay, let's just put them all in there. Are the hard walls. That's what this market's been trading within. It's been trading within this range. Okay, now within that, why is this so slow? Okay, within that, we can see the market moving in waves, because one thing we understand is these markets move in waves. That's what we understand. We understand that these markets move in waves. They don't just go in one direction like this. Oh, sorry, G-Ram, could you send me back your guy who wants to join up information of some of my chats were wiped, yeah? So I do apologize, yeah? So could you send that back out to me, please, his details, etc. Yeah. Just bring that new family member in, yeah? And your other guy as well. Just send them through for me. All right, so listen. In regards to that, the market's moving waves, up, down, up, down, up, down. No market just goes like that, zoop in one direction and zoop in the other direction. It just doesn't work like that. So within this overall trend, we can see bearish momentum, then retracements, then bearish, then retracements, then bearish, then retracements. And we understand this basic principle, which I'm telling you, it sounds simple and it sounds like, yeah, I know that, man, I get that. But let me tell you, people do not do it. Let me tell you what the basic principle is. In any setting, in any scenario, in any market, in any range, I want to buy when it's at a discount. I want to sell when it's at a premium. Now someone says, yeah, I know that. Okay, if you know that, let me ask you a question. On the bigger picture, what are we looking to potentially, what are we thinking in the back of our mind that we want to do with this market on the bigger picture? Somebody tell me, on the bigger picture, just looking at where we are right now, this is where price is, what are we thinking the bigger picture we may want to do with this market? Just based upon what I've said. So, and this is because we're in a premium, because at the top of any range is a premium. What does that mean? That means the price of Mercedes-Benz have been falling since 2008, but by the rate and the way in which they're falling, they're still expensive at the moment. They're expensive in a falling market. That's what basically what that means. They are expensive in a market that is actually falling, in value. Yeah, and down here, around about this region down here, if this wants to move, yeah, we're saying it's going to be discounted. Means that when you're turning around and you say, yeah, I want to buy that Mercedes-Benz, you ideally want to buy somewhere along in this little green box somewhere you're interested in. Why? Because you've seen the market get down there before and you've seen this pattern. If you happen to buy down here your Mercedes-Benz, you'll be happy. I mean, if this market continues going in the way it is in the next 10, 15 years, you're not going to be over the moon because this market's going to keep falling in value. Well, it's a car anyway, they fall in value regardless. But you get my point, okay? And remember, when we draw trend lines, do not get confused and think that trend lines are about lines. They're not about lines. They're about ranges. They're an area of interest. How do I explain that? I explain that like this. If I say to mechanic, go and get me some brakes, yeah, for my car. My brakes for my car are normally £400. You know what I'm saying? And he goes and sees one and it's for 405. He's still gonna buy it for me. I'm not gonna be like, don't buy that. He's gonna buy it for me at 405, at 410. They're around £400. Same way, if he gets lucky and they're 390, 380, he's still gonna buy it. And I'm gonna be over the moon that he's gonna give me some change, hopefully. He's not gonna go and buy himself a cheesy beef patty with my extra £10. Yeah? So I'm saying to you, that is what's going on here. It's an area of interest. No, this doesn't line. I heard people talk about, yeah, man, they're just doing trend lines and like trend lines is nonsense. The trend lines are just a guide. They're a guide to remind me of where we are in that in price action, in this market, where we are. So here, have a look here. This market came all the way up to this point up in here, up to the top of this range. Okay? I could draw this white line better. It's drawn poorly. Top of this range. And then we saw an indication of what it wants to do. That indication is it breaking swing structure, breaking minor structure. Have a look at this whole journey up here. At any time, did you see this market break below swing structure and close? Didn't happen here. Didn't happen nowhere else I can see. This market broke past this structure and closed all the way down here past swing structure. How am I identifying swing structure? Of the structure that's touching on my trend lines. How did I draw that trend line? I drew that trend line because I must touch the data points that we can see here. What are data points? These areas here, and I must touch the last swing data point before the highest point. In here, I've touched both of them, even a minor one in here. Okay, this is how I've drawn this line. So therefore, right now, if somebody asks me a question, I could confidently say the market is trading within this box here. That's what the market's doing. It's trading within this box here. The swing low of this push down here, and this indication all the way down here, and this highest point. That's what the market's trading within. Now we've broken structure, giving me an indication of what the market wants to do. And then the market made a retracement or correction back up into these levels. And when it got to the point whereby it said, okay, that's enough of a correction, the market started to go sideways. You must be able to identify these things if you think you're going to be able to get into the markets, because the markets only do one of three things. It's not to say it does one of 8,000 things and you need to work it out. It does one of three things. So you must be able to understand that. So right now, outside of this little range here, we can see this market once again has now made an indication of what it wants to go on and do, and this is the part of the continuation phase. Let's draw some. Let's draw some stuff in here. This white line here, okay, which is going to be a solid line, which I'm going to write on it, is part of the indication. All right, and we're going to slap that right in the center, the top of that line is the indication. All right, and then we have this scenario here is something that we call, and say it out loud, yeah, drill it into your bones. It's a correction. It's correctional phase. Okay, I'm gonna leave it white. All right, and then we now have a continuation happening. All right, that ultimately, if we are able to understand what's going on in this market here, we should get this continuation happening at least down to these equal lows, but ultimately beyond these equal lows. Why? Because the market's moving waves. All right, so this is a wave. This here we're going to mark as our continuation. Oh, continuation. Now, if you're wicked and bad, you can be able to get access and get entry to this market. You don't have to wait till this closes all the way down below this correctional phase. You can try and get in early within the continuation, because I'm on a daily chart. It's massive. Now, if I knuckle down now, I can see that the market, everything outside that orange box is indication, and then this is correction. So I can try and find the exact same thing that I've just drawn on there: indication, correction, continuation on a smaller Russian doll. Yeah, so I'm looking at one Russian doll, that bigger structure. I want to see that same situation happen on a smaller level. Yeah, because I'm not going to be taking daily trades. Yeah, sitting around here waiting for a whole day to pass before I get one candle. Sorry, I just don't have the patience or the account size for that. Okay, why do I say account size? Because obviously, if I'm going to put my stop losses, I'm going to have to start putting it stop losses above massive daily levels. Yeah. And that takes a large enough account size to make it worth your while. All right, I don't want to put a lot size in for 10 cents. All right, so have a look. Now I'm dropped to my hour time frame, and we can see that the market here very similar. If I was to draw my lines in, I'd have to draw a line like this. Have a look. How? Now, why have I drawn a line like that? Because I must touch the last low before this highest point. And when I've drawn that last low before this highest point, it lets my eye see the structure. It lets me see how here was a level of structure. It lets me see that, here was a little level of minor structure. And obviously here is some swing structure. These two are mostly swing structure. This is a little minor level in here. And the market has come and smashed past this structure here. Now, what may happen in that smash bang wallop is the market might decide to do it once again. Indicate, correct, and continue. So it's a possibility after breaking past this structure, which is minor structure, okay, that the market may decide it wants to correct back into these levels. And when I'm looking for that correction, I'm looking to where might it correct to. So I'm looking for places that the market may be interested in correcting. Now, on a 4-hour time frame, it's not that easy to see. There's a little bit of imbalance down here. Okay, have a look, because we understand that the market likes to gravitate to imbalances. Can you see there's a little bit of imbalance there and there? See, I see it straight away in my eye. Now, the market might just decide to tap that little imbalance and then come and close below. If that is the case, then I'm able to, if I wanted to, hit that trade like this after that little bit of imbalance is closed. The safer place to hit that trade is placing my stop above this swing high. But that's down to me whether I want to take a trade for 115 pips lots, stop loss. Now, how do I determine whether I want to use 115 pips stop loss? It's just based upon what I think is going to be my reward. Because if my reward's only going to be 100 pips, I don't want to put 115 pips stop loss and take a 1 to 0.8 trade. That don't make sense. But if I wanted to say, okay, well, I think this market's going to at least get down to these equal lows over here, all right, which is a 1 to 1.5. If I was to put my stop above here, and really should go beyond, but I might say, well, I don't mind taking a 1 to 2 trade if that's what you want to do. Now, I don't necessarily want to take a trade for 115 pips. I'd prefer to, on a smaller time frame, be patient and wait for that correction, possibly up into there, possibly to where? Let me show you some more bits of confluence that we understand as traders. The market likes to make retracements to 50% of the impulses, either 50% or into the 618 to 786 area. What does that mean? Now, if this is turning around now and making a correction, because I don't know, but it is breaking some smaller structure, it means that maybe this market wants to push all the way back up to over here. Yeah? So therefore, I can either, if I'm wicked and bad, because I really understand my strategy, I could trade this bullish retracement into this green area, into this green 50% area, catch some pips on the way up. But when we get in there, I'm going to be protecting my position and taking my profits. I'm going to be looking for an indication, correction, continuation, bearish. The only difference is now is I might be able to get an entry like this on a smaller time frame, taking it to where? Well, at least to this equal low, but ultimately beyond, because it's made its indications, made its correction, and I want to see a continuation going on. Okay? So I'm saying to you right now, say for argument's sake right now, let's look at this little range of the market pushing down in here, okay? Now we can see a few things. All right, we can see the market. Let me get rid of this. Yeah, I want to get rid of some of the other stuff because there's a lot going on in the background. You guys understood what I was talking about in regards to the top of the range being premium. So let's get rid of first this indicator. We don't need to see that. Let's also get rid of that big red block box because we don't need to see that. We get it. We get it. And what else can we get rid of? So I don't want it to be too, like there's too much going on for your eye. All right. I'm going to get rid of this box. I'm just going to have the border for the box. So like this. I'm going to go border, white line, hair, and no background. Okay. Just make it a bit clearer for everybody. All right. For the eyes, for the eyeballs. All right. And this here we can remove, or we can slide this over a little bit. All right. Cool. Let's get back into it. So when we was looking at on an hour time frame, this market looks like it's potentially on a much bigger picture indicated out of this range, see the orange range, corrected, and now we're potentially, because we don't know, all right, well, until we get it confirm it, potentially now ready to continue on its bearish run. So if it's ready to continue, but yet we can see it down here at the bottom, okay, then possibly what this market may be doing is in this correctional phase of that continuation. Do you see what I mean about understanding this bigger picture? The bigger picture is I think to myself, this market wants to come down. But at the moment, I can't just hit it for a sell because it looks like it wants to come up first before coming down. Now, what you can always do as guides, all right? With these guides, I'm gonna make something clear to you. You must keep adjusting these guides as and when you get more information. So I've just drawn a little line for argument's sake, and I'm touching some data points, all right? Now I'm gonna take this for now, and I'm gonna pull this all the way down to this lowest point of the market, because it looks like at the moment that the market may be having a reaction and making a retracement. That's what it looks like. Now have a look where I've put that 50% green line where it might retrace to. See it right here. Now I'm not trying to say that that's exactly where it's gonna go, but it does look as though if it did make that 50% retracement, if it did, this is imagine that I'm crazy and it does what I think it's going to possibly do, and it comes up here and makes this 50% retracement to that green line. Well, wouldn't that be right on our premium area, which I said to you, in any circumstances, that's really where I want to be selling from. Premium. Yeah. Now, how did I get this range? I got this range by connecting just two data points, yeah, which was here and here, and then pulling out an absolutely parallel line. I didn't try and draw it in no angle. This line here, green line, is the exact same angle as this top green line. So right now it's possible that this market wants to make a little retracement into here to the tune of 30, 40 pips, which I'd love to catch. Yeah, and then when it gets up here, then it might start, that might be at 1 o'clock, that might be at 2:30, who knows? Then it might start saying, you know what, yeah, we're ready to rock and roll now. You know, we're going down here. We're going for those equal lows and beyond, you know? So therefore, if I'm thinking that that's my bias, that is my bias. That is my story. Remember, you cannot trade these markets if you don't have some sort of story. You have to have a story. Even if your story is wrong, have your story. Do you understand what I'm saying? Don't be out here like, doing that, closing your eyes, thinking about
Good morning.
Good morning, Jay.
Okay. Oh, sorry.
Jay.
Yeah, yes. Sorry. I'm just at the little Miss Nursery. Sorry.
Oh, no problem. You mean, all right. So right now, for argument's sake, I'm looking at this market, and though I want to be in for the sell, I'm thinking to myself, have a look at the same strategy. If I was drawing some lines in, have a look at how my lines are going to have to look. They're going to have to be like this on this impulse. However way you want to draw it, it was a bit mad, a bit wicked. There's a lot of action happening on. However way you want to draw it, I need to touch this last high before this lowest point. And we've seen what? What have we seen above that level of structure? If you understand our strategy, what have we seen above that level of structure? What is this? There's only 3 letters that you need to remember. It's called an indication of what it might want to do. The same indication, correction, continuation, we're looking on a bigger picture is the same thing as doing here, this retracement, potential indication. This right now, on a smaller time frame, is a potential correction. Yeah, it's a correction above this structure that it's broken. You heard people talk about change of character. This is potentially a change of character because it was making lower lows. Look at this, all the way from up here, look. Lower lows, lower highs, lower lows, lower highs, lower lows. When have you seen a higher high? Look at it. It's in front of you. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Here you saw a ever so slight high here, but it didn't really close above this structure. But even then, if you thought this was an indication, fine. When it corrected, did it correct past? Did it break this structure? Yes, it did. So forget about it. This is now a lower high. This is now a lower low. But right now, boom, we have got a definite, not a maybe, let me look closely. Is it Owanda's candles? I'm not too sure. We've got a definite change of character, break of structure here, indicating what it might want to do. I don't get excited. I'm not a novice YouTube trader like, oh no, I'm ready to hit the button right now. No, because I know the market's going to correct. So therefore, it's coming back down here, and this is correctional phase. And if I wanted to, I could try by looking at the things that I understand price is attracted to. Price is attracted to imbalances or inefficiencies in the market. So it's very possible this price could come all the way back down into here. Could come all the way back down into here, into this imbalance. That is not impossible. It's very possible. So I'm watching this as not a novice trader. I'm like, okay, I've loaded the bullets now. My gun has bullets now. Yeah? But I'm thinking to myself that before I pull the trigger, this market may correct into this space. If it doesn't, cool. I don't know what the market's going to do. I don't have a crystal ball. So if it says, you know what, Jay, I don't really care about this imbalance down here. It's only a little bit of, what was that time frame? 50 million imbalance, and inside here, a little 5 million. I don't care. I'll come back for that later. I'll be back in the block later. And when I get back on the block, whenever that is, then I'll come and check for that imbalance. That's possible. Because all I'm waiting for right now is a continuation and a close above this high. If I get this close above this high, let me tell you something. I'm going to manage my risk by having my cashback Forex open. And I'm going to take the trade. I'm going to show you something. When I take this trade, I understand that though I can get in here for a 6.7 pip risk, I'm probably better off covering my imbalance. All right, that's going to be a 13 pip risk, maybe plus your spread 15 pips. And if I want to be really safe, I'm going to place my stop below this swing low. This is my choice of whether I want to be aggressive or I want to be a safer, lower risk and lower reward trader. So that's only 20 pips, but it's going to make a difference. 20 pips will make a difference as a zone than, for example, we don't know yet because it hasn't closed above, then 6 pips. Yeah? But either way, that's my choice. If I take this trade with a 6 pip stop loss and then I get stopped out, I need to understand that I was higher risk, higher reward. And I need to be able to have a tough enough skin to get back in, yeah? Or be in a position whereby I'm not at work and I can get back into that trade, yeah, and manage my risk accordingly. Because remember, if I'm just trading my 1% over maybe, I'm still going to lose 1% whether the stop loss is here, whether the stop loss is here. I'm still going to lose that same amount of money. Can I stomach that? Can I stomach that? Can I be like, yeah, it's cat, man, that's all right, it's calm. I can take that out. If you can, all good. If you can't, and your lifestyle doesn't permit you to be in the markets like that, looking at the trade, knowing when the structure's breaking, knowing when certain things happen, well, I'd probably say you should take the safer option. Then maybe you can check back out your trade at lunchtime. Maybe you can check back on it in 15 minutes, in an hour and a half. Because it's moving, it's got more space to breathe. Do you understand? So I'm now looking at this trade, and though I want to be in for the sell, which I've been saying to you guys, yeah, the trades that you see me take big trades, and I'll tell you in the morning the other day when I said to you, we was in the trade, and what trade was it? It was this trade, but I'm trying to think how much was it for a good amount. Was in the directions I wanted to trade with. Now I can either stay in those trades and let it come and kick back on me in the whole retracement, bring my $3,000 back down to $200, and then back down to $5,000, and then back up to $400. I could do that, but why? When I could take the $2,000 at the bottom, and if I'm wicked and bad, I could trade the retracement back up to where it wants to go to, and then get back in. If you're not wicked and bad, and what I mean by that is this: you do not have to trade retracements. The trends are your friend. You might tell me, say, you know what, Jay, I feel you. I agree with your analysis. I'm going to wait. I'm going to set an alert and wait till this market gets back up into a premium at the top of the range, and I just want to sell. And if you said that to me, I'd say to you, I'd spud you. I'd reach out and be like, yes, I get it, bro. And I love your discipline. I love the fact that you can sit there and wait. You're going to go and look at some other markets and wait till you can get in with the trend and sell it from down there. I hear you. If you want to do that, that's fine. But we are day traders, and therefore we want to take advantage, and we are learning also. You understand what I'm saying? So it's going to be very difficult for you to learn by just sitting at home. Don't get it twisted. That is a skill that you need to learn. You need to learn how to sit on your hands. However, initially, you need to learn the strategy. You need to learn how to take the trade. You need to learn to set up your MT5. You need to learn how to use your cashback forwards to know what your lot size is. You need to learn how to move your stop loss in your MT5 on your phone because you're not at your computer. You need to learn how to close your trades. You need to learn all of these things are essential for you to be able to trade the markets. So therefore, that's not necessarily going to be happening by you're a brand new trader. I'm saying to you to sit around for the next 3 days whilst we wait for this market to get back up here. I don't think that's me helping you. Might be helping me. Might be allowing me to stay, disciplined, but it's not helping you to learn how to trade. I'm saying to you that this strategy of market structure, price action, waiting for an indication, waiting for correction, waiting for continuation is the building blocks of this market. You drawing in your ranges. Let me tell you something, just draw in the ranges as I've shown you guys how to draw the range. You will see the market come back to the top of the range and react. Go to the bottom of the range and react. Go to the top of 2 lines that you drew in your trading view. You see the market react from it. Okay, so if you've seen that, if you've back tested that and you've seen the market keeps trading within these ranges, why wouldn't you learn how to get in at the top of the range and get in at the bottom of the range? Why wouldn't you learn this? You will learn it because you've seen it time and time again. Yeah? Now have a look right now. We're potentially, this market is pushing up here. Now I'm looking at my time frame. I'm also looking here. This is 9:01. I've missed a 9 o'clock closure above this level. And right now, though it's on the 5-minute time frame, it's going to be another 3 minutes and 34 seconds before I get a closure over here to say that that continuation may keep pushing up higher. Okay? On a 1-minute time frame, which I keep saying I don't want you guys to be there, but sometimes you have to go there to see what's going on. All right? Now, on a 1-minute time frame, it just allows me to see more structure. It allows me to see over here a 1-minute close. Now, if we do get a 1-minute close in here and I decide to get excited and get in here, maybe the market doesn't give me a 5-minute close. See, I've got a 5-minute close and I've got, let's have a look. I've even got 15-minute closures breaking this structure. This is a 15-minute structure also. Look, we can see it. Yeah? So this is all down to you as a trader where you want to go. Let me tell you something what you do want. You want a clean, clear closure above this wick over here. If you can't see where that wick's at, we're talking about all the way over here. See that right now? The reason I haven't hit the button, so I'm going to hit the button in a minute, okay, is because we haven't got that closure yet. Look, it's not a coinky dink that you see the markets come up to these levels and just start mucking about a bit. Because they're kind of testing you. They're kind of seeing how many dopey traders can we get to quickly hit the button right now, and then we're going to fall all the way down here. I'm telling you. I am telling you. It's like the market's playing a game. It understands. Look, over here there was some liquidity for the smaller traders. Let's just grab some liquidity. Look, I haven't gotten the trade yet because I haven't got that clean closure that I'm looking for. Not on the 1 minute, which is the most risky. I haven't even got it on the 1 minute. Yet along the 5 minute, that will happen in the next 1 minute and 50 seconds. I can wait 1 minute, 50 seconds. In 1 minute and 50 seconds is going to be a 5-minute closure. If I get in here early for a 1-minute closure, which will be a 1-minute closure, don't get twisted. Yes, it will be. But it's not as solid as me turning around and saying I've got a 5-minute closure. Now, this gives me patience in my trading. But I'm advanced enough that I don't have a problem taking 1-minute entries. Why? Because my lifestyle allows me to constantly be at this at the computer. And not to say that you have to be. You don't want to trade and have to be here constantly in front of your screen. You do not. You want trading to be something that you can do and passively make you some money. If that's the case, it's not 1-minute entries you're looking at. Yeah? You're looking at bigger structure. Have a look, I'm still waiting. Look, on a 1-minute time frame, we've just got a closure. Let's have a look at it. Did we get a closure above? Still ramping. All this wickety wick. I don't want to see the wiggity wick. So now we've got an extra 45 seconds for a 5-minute closure. Let's see if we get a closure there. If we get a closure here, I will place my stop aggressively below here, or better still, I will cover this imbalance. Yeah, to about here. It's only 15 pips. It's not colossal. It's not like, whoa, it's crazy. It's not. Yeah, it's not colossal. Yeah, so on that basis, right now, what I'm doing on my other screen, have a look. If you think I'm lying, if I lied, I'm flying. I have my cashback Forex in here. I have my, GBPUSD pair coming up. I'm looking at the zone, which is 6 pips plus my spread. Might as well say 7 or 8 pips. And I'm calculating what my lot size is going to be by hitting calculator. Remember, for your FX pairs, you don't have to mess with the contract size. Only for someone was asking me, Jeeves was asking me the other day. Yeah, that's only for your indices, or your gold and things like that, where you have to start messing with the contract size. For your Forex pairs, your EJs, your UJs, your GUs, you don't have to do nothing with that. Just hit the button, hit calculate, and it will give you the lot size based upon your account size, based upon how much you want to risk. Yeah, have a look. Look how calm I am now as a trader, because I'm waiting for a closure above here. And look, a 5-minute closure just happened, but it still didn't give me quite what I was waiting for. It didn't give me that closure above. So now, unfortunately, I'm outside of that 5-minute closure, and now I'm in the 1-minute closure space. I'm in the 2-minute closure space. Have a look. We just got a little push. We've got 10 seconds before it goes closes. I'm gonna take it. All right, I'm gonna take this trade right now, and I'm gonna leave the rest to God. All right, leave the rest to God. All right. To God. Now, like I said to you, your stop can be all the way below here. This is the safest place for your stop. Okay, the safest place for your stop would be definitely below the imbalance. Definitely below the imbalance. But even safer than that is going to be below the swing low down here. Is the safer place. If you're like, listen, I'm going to work, I'm gonna hit this trade and see what happens with it. Stop should be down here. All right. And then I leave the rest to God. I understand that this is a retracement trade of some bigger energy, and that retracement trade, have a look, could potentially be coming up to that green line, which is 50% of the impulse. All right, 50% of the impulse. Uh-oh, why did this take 2 trades? Okay, so yeah, potentially could be come up to this level, 50% of the impulse from up here to down here, potentially up in here. Now, whether or not this market, before it does that, have a look, decides to come back down here. Yeah, decides to go sideways. Whether it does that first and then decides to do this, I don't know. I don't know what the market's going to do. I wish I did. I do not know what the market's going to go and do. However, I understand that based upon my strategy, I've had an indication, I have had a correction and a continuation. Though it is on a small time frame, I would prefer that you see in the next 2 minutes and 15 seconds that I had a nice close on the 5-minute time frame compared to the entry that I just took. Because it's a more solid of an entry. Now I'm telling you this because I'm letting you understand the difference between taking these smaller 1-minute entry closes, 5-minute entry closes, about aligning your entries with actual time. That at 9:15 is going to be a 15-minute close. Think about all the traders that are waiting for 15-minute structure, 15-minute closes of candles. Think about all those orders that are going to rush in at 9:15. It's going to be more orders rushing at 9:15 than 9:13. Do you understand what I'm saying? Who's out here saying, yeah, boom, yeah, I beg you, buy me those trainers if they get to 111 pounds and 70 pence. No one ain't saying that. Someone's saying, bro, yeah, if they're about 120 pounds, just buy them, or between 100, but they're giving you that nice round solid number. It's the same with these time frames aligning to time. Do you understand what I'm saying? Yeah. So though we never got that 5-minute closure, maybe we're going to get it at 9:10, because now 9:10 is a 1-minute closure, it's a 2-minute closure, it's a 5-minute closure, it's a 10-minute closure. I've got 4 different closures aligning with time, opposed to it just being 1 minute, just being like 9:17 or 9:13. Only 1 minute divides into the number 13. Can you understand what I just said there? I don't want to make it mad for people with the maths, but am I making sense? Only 1 minute divides into 13.
Yeah, I'm
Whereas,
with you, man.
you get me? So I don't know, say for example, you got a 9:04 close. You're like, okay, 1 minute goes in there and 2 minutes closes in there. There's not a lot of people looking at 4 minute time frame, but maybe if you want to go there, 4 minute goes in there as well. All right. But no one really is out here saying, yeah, I'm looking at 4 minute structure. Generally, it's kind of where we're at with this, with 1 minute, 3 minute, 5 minute, 10 minute, 15 minutes. Some people trade half hour, 1 hour. There's nobody out here saying people looking at 45-minute structure, to be fair. Yeah? Not necessarily. All right? So I'm looking at this now and getting a couple seconds. Still haven't really got a 10-minute close here, which is a bit annoying. Yeah? Which means that market could decide to come and retrace all the way back into here before doing something. I still haven't really got that closure on a 5-minute time frame. Have a look. I actually got some wicks. Like it looks like it's going to go and do that. Have a look. Now, understand this. If you see me get into a trade where I haven't got those confluences, I do what I preach. I'm getting in very small. It's it that whether I win or lose, or not say win, if I lost this trade, it wouldn't affect my account in any way. Any way considerable to me, like, oh my gosh, I just lost a trade. It wouldn't. I'm not at my 1%. I'm not at my 0.5%. Do you understand what I'm saying? I'm less than that. Yeah? Because I understand that if I can jab and I start seeing this going the way it's supposed to go, then there's nothing to stop me from scaling in and making that previous trade risk-free. There's nothing to stop me from scaling and going, okay, what I thought was correct. Because this is just all ideas. All of this trading stuff that we're doing is just our ideas. They're not fact. It's not fact that this market's going to go up and go to that green line above there. It's not. I wish it was. It's not. It's my opinion. Right now, we could just see a big old candle, especially as, I'll tell you why, we haven't even looked at what's going on in regards to fundamentals, which we understand is very important. For all I know, right now at 9:15, there's some massive red folder news coming up. All right, which is a mistake. That's a mistake. I'm going to hold my hands up to that. But have a look. Look, there's GBP red folder news coming out in 18 minutes. There you go. There you go. So for all I know, that GBPU high impact news is going to make this market do a bit of a madness where I'm thinking to myself, you know what? That imbalance, have a look. That's just actually, obviously, colored things now. But this imbalance down here, in the next 18 minutes, maybe we see the market do that. Zoop into that imbalance and then start to go. Maybe that news makes it go here very quickly, tumble down here for 11, 12 pips, 15 pips, who knows? One quick wick action. And that means if my stop is not in the right place, I get stopped out. If my stop is below this swing low, I'm good. But if my stop is aggressively below here, I get stopped out. Because I'm looking at the news, I'm looking at why is this market dancing around here? Maybe it's dancing around here because it doesn't want to break yet. It doesn't want to break the levy as yet. It's waiting for that next 20 minutes for the news. Because remember, guys, the news gives the markets an excuse to do what it would do, a madness, to do what it wants to do. It wants to come and close that imbalance for all we know. So this news here is going to give it an excuse to just zoop. Let's go and get rid of that imbalance and then let's go. It wants to go bullish, but before we go bullish, just make the volatility come and get rid of that inefficiency. Zoop, zoop. Down and close it straight up into space. And you're like, oh, look. Oh my gosh, I was in for the buy and I got stopped out and now it's in space for 100 pips. Because you didn't take into consideration these concerns. And there is, obviously this is a bit later on in the day, so we'll leave this here for later on in the day. Okay, but this right now is some very real news that can impact our GBPUSD trade. Why? Because it's a GBP British news about S&P Global Manufacturing PMI. And let me explain something to you. Because this is scheduled news, the bigwigs, the guys with corduroy suits with white socks and big thick glasses with the hairline leaning back, they have been in an office for the last 6 weeks analyzing what they believe S&P Global Manufacturing PMI is going to do. They're not waiting for my FX book to tell them what I've gotten. They're not sitting there saying, oh yeah, as soon as my FX book comes out, we're going to know what's happening. They have done the research. They've actually looked at the data like this for the last 3 weeks, analyzing it, carrying the one, square rooting it, dividing it by 2. So they already know if they believe this market's going to come up higher than consensus or less than consensus. So therefore, they've already factored it in. They've already been like, yeah, guys, we're going to go bullish and go to the moon. Before we do that, let's drop the market You've seen the meme. Just dump it, pump it, hold, dump again. They know that, and they've got the liquidity. They've got the funds to be able to understand that's what they want to go and do. Yeah, to be able to implement that, to be able to say, we're going to inject a certain amount of cells in, push the market in one direction, only for us to go and push it in the opposite direction. They have the power to do so. So that's going to be very interesting, and we're gonna come back to this market in 16 minutes. And I will say that I am looking at it, and now we've got that news. I'm definitely thinking to myself that could definitely happen, or that market could go and push down here really quickly. Yeah, especially as we haven't got this close. Look, we've got a 9:15 come as well. Still ain't got the close. Just far arsing about. Just like nee. Yeah, but I've managed my risk, and here's what it is. Let's go quickly look at something else. We're going to look at this before we close up. I'm going to go and have a look at. I'm not going to look at gold. I'm not going to look at something different. I'm going to look at EJ or UJ. Okay, EJ or UJ. Just duplicate this out. Or is there a pair that somebody wants me to look at? Let me know if there's a particular pair you want me to have a little glimpse at, and we'll break that down quickly though. Not as long as we took with this one. We'll break it down quickly. All right.
I was on US 30 yesterday, yeah, and there was a big drop. I don't know if you was in it.
Let's go and have a look at US 30, which is going to be quite similar to our GU. All right. I'll tell you what. We look at US 30 in a minute. It's going to be just very similar to our GU. We'll look at USD JPY, or we look at UJ. All right. So UJ, have a look at UJ. All right. Now we understand, especially from some of the information we've been getting from Brother Alan in regards to the fundamentals, that the Japanese are trying to stimulate their currency. They're trying to intervene, all right? Because their currency has been going to shit, for fear of a better word, for some time now, all right? Meaning, have a look. This is the United States dollar against the Japanese yen. If I zoom out, as we like to do, understanding the bigger picture, look, it has just been going to the moon for some time, meaning that the Japanese yen is very weak against the United States dollar. That's what it means. And if I was to superimpose the JIXY, the JXY, the Japanese yen currency index over on top of this, you'll see, look, it's just been going to hell. It's been losing strength. This purple line is just purely about the Japanese yen. Yeah, I don't know what's going on here. What this line is looking at this. Don't know why that's like that. It's just been going to hell. It's been losing strength. And if you're there and you're looking at your beloved currency, at some point the man them are just like, listen, gotta do something, man. This is getting out of hand. We need to do something. It's looking nuts right now. So therefore, the Japanese are like, listen, we need to add some type of fiscal policy. We need to do something to the markets to strengthen our currency, to make our currency. Let me ask you guys some questions. Let's get a little bit deeper. What is there anything you can think of what a country could do to make their currency more attractive or stronger? Does anybody know anything that can be done? Fiscal policy is what we're now talking about. This is high level education. You get no type of education left, right, and center. What can a country do to their currency to make it stronger?
To raise interest.
Okay, explain that to me. Explain how raising interest could make a currency get stronger.
It makes things more expensive, so the country's assets are worth more, boosting the economy. That's just what I guess.
I'm not going to give you 4 points on it because I don't fully agree with that, because God's advocate might say, well, if you make everything more expensive, people might stop buying it. But it does have an impact because people still got to buy their staples. You still got to buy energy, you still got to buy food, you still got to buy certain things. So yes, so I'm not going to give you 4 points on it. What am I fishing for? What am I fishing for in regards to interest rates? Think about the word interest rates. At what times in your life do you hear the word interest? Like what, in regards to what? In regards to what?
Investment. So
keep going.
So encouraging people to invest so they get more interest on their money.
There you go. So therefore, if I raise the rate of interest of imagine I've got JP coin, and I say, everyone, you're getting 1% interest on JP coin. I'm like, yeah, well, we kind of like JP. We'll put a little bit of money there, but yeah, it's not that great. It's all right. I'm gonna put a little bit in JP coin. I'm gonna put some in, this place and some in that place. But if I turn around and say, you know what, screw this for free, you get 10% interest with me. Man, I'm gonna be like, what? Nigga's gonna be man that from outside the country going, 10% interest. I'm gonna take my money from here and I'm gonna put it in the Japanese yen because I'm getting more interest there. My money is growing faster there. And that's the Japanese yen, whether that's going to be in companies or wherever it may be, but it's going to strengthen the investment from foreign investment. Okay. Now, in regards to obviously, if that starts making things more expensive, that can affect their companies, like the Nikkei 225. It can affect them in a detrimental way. Because now it's becoming a little bit more expensive to invest into Japanese companies. You understand what I'm saying? Yeah, but from a perspective of interest from foreign investment, investing into the actual yen itself as a currency, well, that can help strengthen. So you have to understand this relationship. Now, look, this relationship isn't always one-to-one. It isn't always like, yeah, if we do this, also, the US 30 or in the companies are going to go down. Because look, we've been historically seeing, have a look at this one. We've historically been seeing US 30 previously. It was just going for it. These indices were just going for it. When we knew that the index, the interest rates were being put up. America's interest rates was going up, and US 30 wasn't necessarily falling, but the same way, because sometimes, as Alan says, the masses can kind of ignore the Fed. They start saying, nah, we don't care about that. No, let's just keep going. Yeah, it happens. Yeah, so like I said, the fundamentals is fundamental, but it's not the be all and end all. And that's the reason why we always have to manage our risk. Yeah, because even if it looks like a duck, yeah, and you heard a sound and it sounded like a duck, you might get up close and it's not a duck, something else. Yeah, so therefore you always have to manage your risk. Have a look here. Remember what I was saying about this closing above here and it dancing around? I was concerned of it just dancing here, not giving me a closure. Look, now we're having a bit of a retracement. Now I'm telling you, this retracement could come all the way back in here. Oh, wait a minute. We've got 8 minutes. Let's go and check, because we did say we're going to come back to it. We've got 7 minutes. And I personally think that maybe this market is coming down and is reaching in here. Now, for example, if you saw this imbalance, but you're not able to take a market execution trade, you could have placed a limit order, for argument's sake. Say, Jay, I think this market's going to come down here and close this imbalance, especially with the news coming out. I'm going to place a limit order like this for 14 pips, let's just say 15 pips, and I'm going to go to work. And if I get triggered in, great. For a 1 to 2, 1 to 3, I'll place my stop loss, my take profit up here, then great. But I don't have the time to sit here and do market execution. If you did that, I'd understand. I get it. I would say that you should make sure that your stop loss is a little bit below the swing low, just in case the market decided it wants to go and capture some liquidity below here first. Nam. All right, so maybe that 50, instead of making it 15 pips, you're gonna make it 18, or 20 pips. And you're going to place your entry right at the top of the imbalance, or some people have to take it 50% of the imbalance. I think for the fear of a few pips, of you trying to get 50% of that imbalance, I say you might as well just take from the top of it and then go about your business. And therefore, if you see a wick happening in the next 6 minutes into here, boom, you'll be triggered in, and then boom, you'll be in profits and you'll be on your way. And when you check on your trade at 10 o'clock, you're like, oh wow, good profits. I mean, I've made $500 and I've just been here at work, sitting at my table, at my desk. All right. But look, have a look here. I said I was concerned about the way it was dilly-dallying over there. All right. But my stop's in the right place and I've managed my risk. Any questions, guys? Any questions? We're going to wait for the next 5 minutes and see what happens. And then we're going to finish up the session. But any questions in the meantime? Al, you want to tell us give us 5 minutes of information about what may or may not be happening in the world?
Grand Rising all. Lots of things happening. I've tried to put notes in on the group in regards to the yen. They did intervene on Monday. You can see the institutional candles. They intervened numerous times to a tune of $48.2 billion. Yeah.
So, let me break that down, because I was actually breaking that down the other day and I was looking at it and I could see it, because I was actually in UJ for a little while and I keep seeing, let's get rid of that. I keep seeing this institutional, these spikes down. Every time he was getting the spikes down, it's like the market was fighting back and saying, the market was saying, no, don't try it. We don't believe you. Yeah,
absolutely. I mean, I think I mentioned this before. They were talking too much about it the last week or so. The yen is at a 30-year low. Again, a 30-year low against the dollar. Some of you may not have been alive at that time. The last time they intervened was in 2022. However, this time it's we went to 160. Monday, Sunday night, Monday, so they intervened. You could see on the yen pairs, you can see the massive whipsaw institutional candle. Now, if you didn't know what institutional candle is, that is an institutional candle. Well, there were several institutional candles that gives you they've got the selling and buying power to just do what they like. So $48.2 billion, not million, $1 billion was invested by the Japanese to basically strengthen their currency, but the market was fighting against them. You see, the market is very, very strong. Yeah, if it fights against you, you got a problem. However, the market can't fight the Fed. Yeah, and we'll find out that tonight at 7 o'clock. We've got US interest rate news, and then we've got the conversation, the questions answered at 7:30. Now, the 7:30 is the one you want to kind of tune into, because then you'll get a feel for if he's hawkish or if he's dovish. The consensus is going to be hawkish, where he's going to basically say, I think I mentioned this the other day, that they're not going to cut interest rates until they see, they look at the data points, and the data points are kind of ticking the boxes. Yeah, so that's what's going to happen today. Yeah, I'm telling you so, because that's what's going to happen. Also, tomorrow we've got Apple after earnings, 9 o'clock. Now they affect all the indices, i.e. the US indices, after 9. So there'll be a massive whipsaw again with Apple. So if you're in at 9 and you want to jump in the trade, please be careful, because Apple, when the Apple comes out, it's a mad thing. There's news at quarter past 1 today. Jobs news, and as I said, we got non-farm payroll on Friday. So a busy period. It was busy yesterday. News. It was orange folder news, and that moved the market. You see, so every data point. That's my point. Every data point is really important to the Fed at the moment and to all the traders and institutions. Yeah. However, I believe the Japanese are going to try and intervene again. However, they are waiting to see what the Americans do today.
Thank you for that.
Any questions, anybody?
No, because I was definitely had my eye on it. I keep seeing it, and I was like, I was not scared, but I was like, every time I'm in a trade, I'm in great profits, and I knew previously a couple of times the spike out stopped me out for profits, never not profits, but the spike out was so fast that you got the concern of slippage for a start, and also you're thinking to yourself, the market is pushing it up, wants to go up. But every so often, those spikes are wiping the books. Do you understand what I'm saying? They're wiping the books. If you're in a trade, there's no like your stops for the day traders anyway. Wiping the books. All right.
That's what they did. Yeah. they feel that they were the consensus is from them is the last 2 weeks to feel that there's been a lot of people basically but long in the yen against the yen, sorry. So basically there's been a lot of people out there basically conspiring. That's the word I'm looking for, to basically make sure the yen against the dollar strengthened against yen. However, that's not the case. The dollar strengthened due to America's job market and the GDP and so on and so forth. However, that is weakening the last few data points. So again, jolts today is going to be really important, and also non-farm payroll is going to be very, very important to see if the job market's weakening. If the job market starts to weaken, then you'll see the Fed intervene, I believe, with an interest rate cut, but it's got to weaken substantially. So, I can understand where the Japanese, where they're going, the BOJ. However, it's their own faults, to be fair, because they kept interest rates at minus. Now it's on zero. They need to get with the program and start raising interest rates if they want to. It gets back to what you said earlier on with the question about interest rates. They need to raise interest rates. The Japanese, needs to get into the real world. They kept their interest rates at historic low at minus. That means there was a lot of best investment in the country. Interest rates goes up, there'll be less investment because it becomes too expensive. So just want to clear that up.
That makes sense, and that's how you can turn around. Is that obviously you're seeing now this game that people that these countries can play, keep their interest rates low so that their businesses do well and industry does well. Do you know what I'm saying? Because for whatever reason, that's the agenda. Maybe they're trying to show the world that Japan is the central hub of everything that needs to be created. Well, they achieved that, if you really want to think about it. Do you understand what I'm saying? We know that when it comes to manufacturing and things like that, we know that everything comes out of Japan, in these kind of places. They've achieved that goal. But in the payoff, the trade-off for that, of keeping those interest rates low, is that your currency is going down the drain. People that it's getting weaker and weaker and weaker. For people that live in Japan and they want to come over to the United States of America, they're like, "Wow, bread is expensive." You know what I'm saying? They can't do nothing with their money.
Absolutely. The issue is that BOJ, they were scared to raise interest rates. I mean, they had their meeting last week and they didn't raise interest rates. That was Friday morning, 4 a.m. Thursday night, Friday morning, 4 a.m. They didn't raise interest rate. That made their yen even weaker. So they've done it themselves, They're complaining about, the market, going against the yen, but really and truthfully, they've not done themselves any favors. And the reason why the dollar's strong and the dollar's been strong is due to the fact that the American economy has been really strong. Unusually strong, especially with high interest rates. Don't forget, the interest rates are 5.25 and it's the highest in 15 years, right? But the American economy is very strong. However, we see, it's getting a bit weaker. Again, data points jolts today. Conversation with Chair Powell at 7:30 because they're not cutting interest rates today. They may not cut this year. And if they don't cut this year, you're going to see indices, fall. They're going to hit, the correction's not going to be 10%. It's going to be worse than that, right? It's starting already. So just bear in mind that.
Guys, for me, I think one of the best bets at the moment for me, from a technical perspective, is GU falling to shit. Now, if I look at the charts from a technical perspective, US 30 is kind of in the middle of a bigger range. And that's kind of gives a validity to what I was saying. Might come down. If this happens, it might come down. But then again, the market's been so stubborn. Is it going to continue being stubborn? Like, people don't know. You can't really definitively say if that bubble's going to burst and it's going to come down, because a lot of these companies have been doing very, very well. Do you understand what I'm saying? The earnings coming out, moving the markets, doing crazy stuff, etc., etc., etc. Okay? The GU, from a technical perspective, we're in a premium. That US dollar, like Al just said, is strong and continue getting stronger. And they run the world. They're gonna do whatever they need to do to keep their currency strong. Do you understand what I'm saying? To keep on top of the other attacks and threats from Brinks, from the Japanese, from all of these are the ops. All of these people are the ops. They're the opposition. Yeah? And I can't see Great Britain, you might as well just drop the great. All of a sudden, their currency getting tremendously strong. You know, yes, you can see interest rates happen, but you think about it. If interest rates get too crazy too quickly, this country that's already melting, right, is going to go into, it's just going to get nuts. Are house prices, interest rates going to go up? Yes, they are. But is it going to be by a velocity and a size so big that it's going to topple the US dollar and be substantially stronger against the US dollar? I just can't see. Yeah, and like I said to you, from a technical perspective, if I zoom out of here, all right, I'll zoom all the way out of here, I'll zoom all the way out of here, I'll zoom all the way out of here. In my opinion, this market that has been falling to hell for some time, I haven't drawn this white line very well. Okay, I could draw it a little bit better than that. Look how I'm cutting through all the tops of these ranges. Really, this should be like this angle, a bit more like this, a bit more like this. All right, trying to touch those data points there. And obviously vice versa, all these should be the same angle, but we're right in that premium up here, man. Yeah, we're right in the premium all the way up in here. Look at that market. I'm just trying to work it in my brain. Why would it start going up here? I don't see it. Yeah, US 30 continues being stubborn. It could go either way. That bubble could burst and fall to hell, or it might they might just still keep fighting it. AI starts happening, something else starts happening, something else starts driving that market some more. I don't know, there's some new technology, AI. Remember, they're now waiting for AGI, yeah, which is artificial general intelligence. If you don't understand what that is, in a nutshell, AI you can ask it questions and it can give you very specifics of how to tackle that question. Artificial general intelligence can look outside of its protocol of what it's doing at other AIs to not only to just do a madness. You know what I'm saying? It's like you can ask Canva AI to create you something in Canva and it will do it. AGI can look everywhere. I can get a bit of Canva, get a bit of this out, get a bit of some of that, get some data from there, this, that, and other. Voila, I've just made you a brand new car that drives on water. Kaboom. Now, if we start, and remember, this progress of AI is exponential. They don't know how quick. They have no measure of how fast or slow it's going to be. The AI intelligence is they said it's exponential. It's learning at a rate that is, they can't even measure it because it's teaching itself how to teach itself. So for all we know, next month we hear the breakthrough in AI and AGI has done this and quant computing and XYZ, and all of a sudden that just drives the US 30 tech stocks or drives the NASDAQ, and all of a sudden it just keeps going. There's a bit more of an X there opposed to Great British Pound just getting some strength from some. Do you get my point? Do you get what I'm saying? Looking at it from like a more kind of just a common sense kind of look. Do you get where I'm coming from in regards to the difference between maybe like a NAS or US 30 and like a GU? Yeah, I hope you do get it, all right? Because I'm trying to look at it and I'm trying to present it to you in a kind of a basic common sense kind of way, all right? Remember, the US 30 and NAS are normally powered by, the big guys in there are kind of tech stocks, you know, the kind of tech stocks, your Apples and your Microsofts and your Nvidias and whatever it may be. So if technology, which at the moment we can't really gauge how quick that thing's going to just blow up, just we hear tomorrow about some massive revelation that something else is happening in tech, those stocks are going to go, they're going to go again. You get me? But anyway, guys, good morning. Thank you for being here. I'm very grateful for your presence. Believe me, trust me, I am here for myself because I want to learn and hone my skills and sharpen my tools. But I'm very, very grateful for your presence. What I'm going to play today, guys, I'm going to recommend you guys a book that I started listening to yesterday, which is, I'm going to play it for us. Let me first tell the people them that are on YouTube to like and subscribe and blah, blah, blah.